Good morning, afternoon, and evening traders from around the world. I hope you all have had a fantastic week so far in week 4, and you're ready to rock and roll into week 5. First things first, we need to take a look at a few things that are going on to make sure that we're up to date with all of the goings on in the week ahead. We don't want to get caught behind on something. One of the first ones, obviously, seeing if there are any holidays. There aren't any holidays next week, but there are some in February. Well, just one, President's Day. But we don't have to worry about that next week, so nothing to really be concerned about there. As far as the news, there's nothing going on Sunday, but Monday, February 1 at 10 o'clock, we have the ISM Manufacturing PMI forecast is 60. The previous was 60.7. On Wednesday, there's nothing on Tuesday. At 8:15, we have ADP non-farm employment change. Forecast is 50,000. That's a medium news announcement. At 10 o'clock, we also have a medium news announcement. ISM Services PMI forecasted 56.7. Thursday, the 4th, at 8:30, we have the medium news announcement for unemployment claims. Forecast is 850,000. And then Friday, the big ones, we've got all of the large news announcements coming out at 8:30. Average hourly earnings month over month. Forecast is a positive 0.3%. U.S. non-farm payrolls or non-farm employment change numbers forecasted 55,000, and then the unemployment rate forecasted at 6.7%. So there's a lot of big things happening on Friday, but we do have some news throughout the week to keep things going. So there's plenty of things to hopefully keep some volatility up and running. But with that out of the way, now we can start digging into some charts for week 5. That's going to be January 31 through February 6th. First on the list, we've got the NASDAQ pulling back a bit off of the highs, and with that pullback, it has left behind an unfilled gap. You can see that little red line right there. That gap is waiting to get filled in at some point. Typically, gaps usually get filled in within a week or two, but we're talking, this is a weekly brief. This might be a little bit until we get up there. It's all the way at the top. Makes it a little bit awkward. We still have that major unfilled gap below as well that's waiting down in the 12,375s. It would love to see a pullback to that zone. Realistically, we're cycling off the top of the channel. We're getting back to the lows of the channel. The big thing that stands out here is the potential for a measured move down, almost perfectly down to the lows of the channel, and that lines up almost perfectly with an L2. And not only is it just an L2, it's a TUL2, so it's a very aggressively bullish pattern that's all setting up right around the same place. So if buyers can show some decent support here in the 12,600s, that might be off to the races for another strong leg right back up again. Now, if they're not able to, that's where things get a little bit slippy, because if the buyers lose their ground underneath, like 400s, 300s, then it's kind of a wide open door. We really don't have any other support until underneath 12,000s. So buyers really need to show up to the party here, because if it starts sliding, there's a big wide open space for it to slide down. Over on the S&P with a similar situation, we've got a nice pullback. The S&P still is showing more strength than the NASDAQ this time around. Of course, we do have some negative divergences that's showing that the top may be in sooner than later. Realistically, the best the sellers are going to be able to get is a range. Very uncommonly do markets just V top, V bottom, he says, with one right on the chart. It does happen sometimes, right? Just typically, that's not the case. So seeing this measured move to the downside, very similar. We've got the channel lows, we've got the TUL2 to the upside, which is just begging for a bounce, and that's hanging out at around the 3650s. There's no big psychological levels or anything like that to really support the S&P, at least not like we have the NASDAQ with 12,000 and those big numbers. The S&P, we're just kind of hovering around. Same thing here, though. If the buyers don't show up at the lows, if we start losing ground below the 3600s, it's a shallower door down to the 3500s. But if that breaks, there's nothing until 3200. So, buyers have a little bit of wiggle room down here. But if it breaks down, that could definitely cause some problems to be concerned with from the bulls' perspective, at least. Then over to the gold market, we have a very nice higher low and lower high wedge formation going on here. Markets responding to L5s on both ends, to be expected. That's your typical range-bound scenario. Buyers did more recently cycle off of the potential lows, but this is kind of, and why I say potential, an unconfirmed low. We haven't really had follow through to the upside. Not like this, right? This is very obviously a swing high. We've got some proof. You know, same with over here, same with down here. This one's kind of new to the party. So as far as rising support, it might be there, but it's certainly not the best one in the world. I would rather be looking for falling resistance or a firmer level of rising support that's just a bit further out. Now, it does tend to line up close, but that would look a little bit nicer towards those 1800s if the buyers are going to get another dip. From the sell side perspective, sellers did just cycle off of the highs, and we haven't really fully proven the low yet. So that's very likely that we see another attempt down, and that's where we get that proof. I'm looking for a higher low failure. I don't want to see them even break through the lows, and then utilize that as a rotation back up to keep things going through the top. Over on crude oil, here we sit in the 53s, 54s, 52s. We knew this area was going to be a mess. That was the expectation. But man, it's been a mess a lot longer than I was thinking it would. We're going on half of a month now, going on 3 weeks. There's obviously a lot of orders that are exchanging up here in the 54s, and there's obviously a lot of orders exchanging in the 52s. We're just inside this really big range. Obviously, this range has a pretty bullish sentiment. I think that's fair to say. Buyers are going to be looking to buy the pullback. And what better psychological level than the $50 mark? That's where the market cleared above and kind of broke away from. And it's just begging for it to come back and retest it. We've been waiting for a long time. I thought it was going to happen over here, but it just never came back. Now they finally have a shot. Maybe we get that pullback to 50. Buyers supporting that. Not only is it a $50 psychological level, but it's also the continuation on an L2. And that would be the first break below the channel, which usually doesn't get very far. And even if it does slide a little bit lower, we've got an L2 right underneath that, which is also valid in kind of the in weight as a backup for support to try to kick the market up anyway. Over on the currency side of things with the euro, we did have some very nice continuation into the 1.23s, and then it stopped. All of that continuation just fell flat on its face. They tried breaking above the highs, rolled over, and now we're stuck inside this L2. Notably, one big thing that the euro does seem to be doing a lot of is wedges. We've got aggressive wedges to the downside that break and offer up several opportunities. Those wedges break into wider wedges, which are waiting for more opportunities. The top of the trend reversed on a wedge breakdown. It's all over the place right now as far as the euro goes, and it's all based on the backbone of a wedge. So with that in mind, generally speaking at least, I want to be keeping my eyes out for wedges. They seem to be relatively prevalent here with the euro. And right now, we've got a pretty nice structured one sitting right on top of L2. We've got an L2 with a trap on the bottom and a double bottom retest, really confirming the amount of support there. If we can start breaking above the high of the wedge, that would be that breakout pullback zone to get the continuation up. There is a big caveat here, like we've been talking about in a lot of the other markets. Whenever you've got that big breakaway, it leaves a wide open door. And if the buyers start losing their ground, big psychological level 1.2, if that opens up, there's nothing until we start getting down to the 1.18. And that could cause a multi-week drop that might not be very fun for buyers. Over on Bitcoin with the wedge that continues to just be a wedge. It tried widening out a little bit where we had this narrower wedge formation, broke out above the highs, ended up being a total failure, and that just widened the wedge out. It's really all that changed there. Increasing wedge bottom support. The big thing that's standing out here is obviously buyers aren't interested at the top. If they were, it would have kept going. So that wedge breakout on the highs was a complete and total failure. Now, it doesn't necessarily mean that buyers are done, but noticing where the rejections are coming back in, including the wicks on that last bear bar, there's obviously some resistance up here that sellers are trying to pressure. Buyers are still interested, but they're not interested until pretty far down. It doesn't seem like we've got anybody coming in until the 30,000s and lower, at least with any size to push the market back, and that lines up right with the bottom of the wedge. We also know we're coming into February. Typically, February starts off with a flush, then gets a lower high rip in comparison to January, which would be floating right around here, and then ends up closing relatively bearish. So February is usually not a very good month for crypto, and we're already seeing some signs of potential weakness starting to step up that could cause some problems. Buyers will be looking to buy, but they want to buy in the cheap, buy low, 30,000, 28,000, somewhere on the lower edge. If we're looking at this from a pullback perspective, this is kind of what you expect to see. The last time we had a gigantic rally to the upside, we saw the same thing where it goes up and creates this wedge before getting another breakout attempt, and that's going to be really the surefire sign that February this time around is different or it's not. If we break above the highs and it stays in February, that's a very strong indication, but we've got a lot of proving to do before we get anything like that. Over on Ethereum, it seems like the content of the week this week is wedges. Got another wedge. Ethereum showing a relatively nice aggressive rising bottom wedge, showing that buyers are buying more and more every time it pulls back, and they're not letting it pull back as far every single time. Now, eventually, usually at least, there is a deeper pullback, and that gets a bunch of sellers potentially suckered in, and that allows the deeper buyers who have been waiting and waiting and waiting and waiting to finally slam the market and move back up. The big thing that we need to see here is, well, we haven't had that flush yet. There have been some smaller little traps on the lows. We've seen that pretty frequently on these shallower highs, but we haven't had any really good dump. And the one that we did really didn't trap anything. I mean, I guess it made it kind of below that swing, but it really didn't do much. I want to see a good dive back down into L3, back towards those thousands. Now that we've got some potential weakness on the highs, we've got this wedge forming. It just seems like buyers want to buy back on the cheap. And what better place than the psychological 1,000? You line that up with Bitcoin bouncing off the psychological 30,000. Everything starts kind of lining up, all aiming at around the same result. Alrighty, well, that's going to do it for this week. Stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic week of trading ahead of you, and we will see you all in the next. Thanks.